Wise here with your weekly mortgage update. This week has been jam-packed with a lot and significant economic data that really could affect the housing market. You're not going to want to miss this because it will affect mortgage rates, and it already has. So we'll be diving into the latest Fed meeting, job growth numbers, inflation updates, housing trends, all that you need to know. So let's get started and show you what we're looking at here. So, weekly talking points here. We're just going to go through this not real quick, but we're going to go through it because there's a lot of information on it. But basically, the Fed, they kept rates steady. What does that mean? That means Jerome Powell is being stubborn again. In fact, he probably had access to the data that was going to come out today, Friday, about the jobs report. I'll show you that in just a few minutes. But at the end of the day, we really need him to lower the Fed funds rate. Yes, Trump is putting a lot of pressure on him. Trump wants it to go to 1%. That's not going to happen, and that doesn't make sense. But they really need to drop the Fed funds rate, and there's a really good chance that they're going to drop that at the September meeting now, especially after today's employment numbers, which I'll go over in a minute here. But the Fed, there was two dissenters on this, Christopher Waller, Michelle Boland. So the Fed met. They basically said we don't want to drop rates, but there was two Fed members. This hasn't happened in a very long time that dissented, and that means that they were going against the Fed chairman and what Jerome Powell was actually suggesting that they do. So that was a very interesting thing. Inflation came out. Core inflation. You can see this is the core inflation. It's come down significantly. It's not going anywhere. The tariffs, they have not really had an impact on the inflation. It just went up a slight amount over the last month, but that was very, very low. Pending home sales has gone down. So the real estate market is finally starting to take its toll, and people are starting to not buy houses. It has slowed a little bit. So, and that's all due to the interest rates that we're looking at. Apartment vacancies are up. What does that mean? Well, that means it's, you know how rents started to go up a lot during the pandemic, and they really have taken a long time to go down since the pandemic. Part of that is just the availability of housing for those rentals. Well, their vacancies have gone up, so it's basically hit a new high. And so that means that interest rates are actually going to come down. The prices are going to come down. That means inflation is going to start to come down. So that's one thing on the vacancies. GDP came out, and it was up. It was increased, but probably for the wrong reasons. It wasn't because that the consumer was shopping out there that drove the economy. It was more so of the import-export numbers, which you can read on here if you want to, but basically that was a big impact there. Job openings and labor turnover, same thing. Lots of job openings out there. It's going up. You're going to start to see that increase, right? And as that increase, that's basically if you've been fired, it's harder and harder to find a job. Now, ADP came out this week with their job numbers. They were about 75,000, which was an improvement, but it was down from what they thought it was going to be at 104,000, and it came in about 75,000 jobs that were made up in May. So that was one thing. The BLS, I'm going to go into let's go into it right now. We're going to switch screens here. But basically, Bureau of Labor Statistics, basically, it was a horrible job report. So basically, it was 73,000 jobs, and that fell way, way short of the estimates of 110 or 115,000 that was expected. But the biggest thing here that I can tell you is that they adjusted the last 2 months down 250,000 jobs. Remember that when these numbers come out and they're strong numbers, initially The market reacts to them. And this report, it showed $250,000 less jobs over the last 2 months. That's 125,000 jobs that were overstated for the prior 2 months in a row. And that was a big impact. That has the market moving. I'll show you again in just a minute after we get through this here. Capital gains tax reform, that's in play here. Look for that. That's basically a tax on your gain of your equity in your house. So that's out there that you need to look at. Case-Shiller, I'm not going to go into that. And then, so housing prices, they're basically muted right now, and they're dropping a little bit. But I wouldn't say to be worried about going down too far. The FOMC meeting September, there's a 39% chance right now. I think as of today, that probably went up a little bit. In fact, well, I'll show you in just a second. 30-year fixed rates right around 6.72%. And let's go to here. I'm going to go to the silver index, but that's not what I wanted to show you. Let's see here. We're going to go to bookmarks. Let's see here if I can get to this here. That's all right. We'll miss it. Okay. So what I'm going to do is I'm going to go to the market. This is a huge move right here. This is the Treasury prices. Remember, the Treasury prices, the higher the prices, the lower the interest rates are. So the Treasury prices, you can see, made a big move over here. This is today. They came up to what we call this Fibonacci level. If they break through that, that will be basically a new high that we're going into, and mortgage rates will start to come down a little bit. Same thing on the yield. 14 basis point move down today. It moved down to, well, almost to this Fibonacci level of 420. So it's moving down. Again, if we break through that, we're going to go down to 412. Interest rates will start to get better. Now, this is a point to you. I think the Fed, they're gonna lower the Fed funds rate in September. It's too late, right? But they've already done it. Now, what you're going to start to see is the bond market is moving ahead of the Fed. The bond market is basically telling the Fed, yeah, now is the time to actually lower the Fed funds rate. So the bond market is going to drive interest rates down, and it's going to push them lower and lower. So when the Fed actually lowers the Fed funds rate, it will be interesting to see if rates go up or down at that point in time. But we will already have seen the benefit of the lower rates by September, because the bond market is going to push these interest rates down over the next couple of months. This is my theory. This is what I think is going to happen. I can't guarantee it, but that's what I think is going to happen, and where interest rates are going right now. So as I said earlier, interest rates, they're right around oops, I'm going to the wrong spots here. Interest rates right around 6.72. They probably come down a little bit today as a result of the improvement in the bond market. But that's where interest rates are. This is Mike Wise, CMG Home Loans, and your weekly mortgage update. I hope you have a great weekend. And if you have any questions whatsoever, please feel free to reach out to me at any time this weekend. I'd be more than happy to help you. Have a great week, and we'll talk to you next week.